A billion-dollar deal gone wrong, allegations of fake data. A high-stakes legal battle shaking up the global biotech industry. What really happened between drug giant Novo Nordisk and China's KBP Biosciences, and more importantly, does this one messy breakup signal the end of the road for Chinese biotech's global ambitions? Let's break it down. At the heart of the storm is a massive $1.3 billion licensing deal for a promising new hypertension drug. Novo Nordisk terminated the deal, claiming that KBP misrepresented critical preclinical data. KBP fired back, suing Novo for breach of contract. It's a classic he said, she said on a billion-dollar scale. And it's become a landmark case everyone in the industry is watching. So is this a red flag for the entire Chinese biotech sector? The initial reaction might be yes. But the data tells a different story. The market has been surprisingly resilient. In fact, shortly after this dispute exploded, Novo Nordisk turned around and signed an even bigger $1.8 billion deal with another Chinese company, United Laboratories. For an obesity drug, this move speaks volumes. It shows that Western pharma's appetite for innovative Chinese science is as strong as ever. The KBP incident is being seen less as a systemic failure and more as a very expensive cautionary tale. What's the big lesson here? Due diligence. The days of simply reviewing data from an office in another country are over, especially for deals of this size. Major players like Johnson & Johnson and Pfizer are now doubling down on what you could call forensic-level due diligence. This means sending teams on the ground, conducting site visits, and verifying data integrity right at the source. It's about trust, but verifying that trust meticulously. This is also forcing a maturation on both sides. Western companies need to work harder and dig deeper to understand their partners. At the same time, Chinese biotechs are learning that to play on the global stage, they need to embrace radical transparency and adopt the rigorous data standards expected by global regulators and partners. Financially, the fallout for a company like KBP is catastrophic. While it's a private company, if it were public, its stock would have cratered. A deal like this provides a huge near-term valuation boost and funds future research. When it collapses, that value evaporates. The company's risk profile skyrockets. Future partnerships become incredibly difficult to secure, and the cost of raising money goes through the roof. It's a brutal lesson in the importance of credibility. So, how do we prevent this from happening again? The answer might lie in a financial tool called Contingent Value Rights, or CVRs. Think of it as show me the results, then I'll show you the money. Instead of a massive upfront payment, the deal is structured with smaller payments tied to hitting specific, verifiable milestones like successful clinical trials, regulatory approvals, or sales targets. This protects the buyer by reducing upfront risk and strongly incentivizes the seller to ensure the drug is a genuine long-term success. Expect to see CVRs become a standard feature in major cross-border deals. Looking ahead, the next 5 years will be transformative. We'll see more scrutiny, which might slow down deal-making in the short term, but high-quality companies with proven, transparent track records will continue to command premium prices. The gap between the best and the rest will widen for investors. This means a new factor to consider: a partnerability premium. Companies that can demonstrate rock-solid data and a history of successful partnerships will be valued higher. Ultimately, the Novo Nordisk KBP dispute isn't the end of the story. It's a pivotal chapter. It hasn't broken the model of China-West collaboration, but it has forced it to grow up fast. The silver lining is a more professional, transparent, and sustainable ecosystem for innovation, the fundamental driver the world's need for groundbreaking science wherever it comes from remains as strong as ever. Thanks for watching. If you found this analysis helpful, don't forget to hit that like button and subscribe for more deep dives into the business of science. See you in the next video.